Hey guys, welcome. It is 1 o'clock on December 13th. So we just got the closing bell and we had a very directional day today. Let's see what happened. So the FOMC made their announcement and the market had a reaction to it, but it had an even bigger reaction when Powell started speaking. So we can see here that we did sort of kind of go lower, kind of drift higher. We didn't have a lot of commitment inside of this market until we started hearing from the FOMC. Right here at 11 o'clock, we got that big move upwards. And then when Powell started speaking at 11:30, we got another huge move upwards. There was a lot of volatility. It went back down, went back up. But in the end, we ended up higher and actually much higher than when we opened. So let's see what that means in the broader context on the daily chart. So we can see that this big bar today, it brought us basically up to this purple line right here. And we can see that this movement is now parabolic. So all week we've been slowly shifting higher. In the last 2 days, we just started going way, way, way higher. So we're now parabolic in the S&P. It has brought us well above the +3 Keltner channel, way, way, way above. And what we can expect from here is that we're going to retrace. You see this, just like this, it went way above the Keltner channel, but we're well even higher than this one. And then we just shifted sideways for a day, and then we came down to the EMA 20. Let's see if we can find a couple more examples of where we went significantly above. Here we went significantly above, and we stayed above for a couple days before pulling back to the +1 ATR, and then going up a little before a bigger retrace. So overall, we would expect that it cannot stay above this Keltner channel for very long. So before we were talking about, hey, we don't stay at the Keltner channel for very long before we pull back into the exactly +1 ATR before we started moving higher. But now we've gone well above the +3 Keltner channel. And so we really do need a pullback at this time. It's probably going to be a lot faster and a lot stronger than this one that happened up here. We can stay at the Keltner channel for a little while, but we can't really stay above the Keltner channel long. The other example that we saw was a couple days, right? Couple days. So really, we're going to start expecting this pullback. And that means that if I have positions that have really good profits that are locked in, I want to lock those in. I want to hedge my profits. I want to set trailing stop losses on my positions, or just take the profits that I have right now, because I'm going to really start preparing for a pullback at this point. Let's see QQQ. QQQ broke above this sea green line. It had a lot of trouble this morning getting above it, but once that FOMC announcement came, we went above and it just kept on going. So now at this point, we see that we came screaming higher to the Keltner channel over here as well. We're not super far above it like we are in the S&P 500, but it is quite high. This did go parabolic. So since we're seeing that parabolic move above the Keltner channel in the S&P 500, then that could either mean that the Dow Jones will pull back really hard, or both the Dow Jones and the QQQ will pull back really hard. So let's take a look at the Dow Jones. Dow Jones also parabolic move above the sea green line right here. And we have been following that Keltner channel 3 for a few days, or a couple of days, 1, 2, 3, 4 days. We started to depart from it in a parabolic move. Now it's super parabolic. We are super high above the Keltner channel. So at the very least, we should expect a strong pullback from the Dow Jones, and maybe a flattening or pullback in the QQQ. So this is the exact opposite of what we saw earlier. In the QQQ, we got the pullback, but we didn't really get a pullback in the S&P 500 or the Dow Jones. Those just kept trading sideways. Now we have the opposite. Now that we're playing catch up in the S&P 500 and Dow Jones, now we should really see those pullbacks. So your tech stocks, your tech positions might be okay, but for sure the industrials, the blue chips, you're going to expect a pullback coming pretty imminently, maybe as soon as tomorrow. based on how aggressively we moved above that +3 Keltner channel in both the Dow Jones and S&P 500. So these are big developments. These are definitely things we want to be aware of and that we want to account for in our portfolios. So hopefully in the morning we have enough time in order to get out of our positions. Otherwise, I need to, we'll need to get in as soon as we can in the morning in order to protect ourselves from that pullback. So I think that's going to be the biggest thing. The one other thing that I finally became aware of is why I believe the bond market is pricing in rate cuts. So if we go into the FOMC, they always release their summary of economic projections. And as part of this report, they have what they call their dot plot. And this is each Fed official's guess of where they believe rates are going to be projected into the future. So in 2024, you can see that we have some guesses here. We've got one that's at around 5.75. We've got one that's way up here at 6.25. We've got 4 over here at 5.25, which is where we are right now if they don't make any changes. And you can see that several people on the committee vary in their opinion on whether we're going to cut down to, where is this, 5.25, so 5, 4.75, and 4.5. So this is probably where that enthusiasm for the rate cuts are going to be. And this is also would explain why the market went up so much when really we didn't really do anything in terms of interest rates. We wouldn't have expected this huge of a reaction just on saying, hey, we're not going to do anything. What the reaction has to be coming from is from the forward projection. And this is really a forward projection of opinions of Fed officials. Now, is it reasonable for them to have this type of forecast? If I was a Fed official, I would be extremely uncomfortable making this type of forecast. So this means that they believe that there's going to be a reason for them to cut. The only reason for them to cut is if we start to get overemployed and underemployed. And then, or if our inflation goes below 2%. So right now, there's no reason for us to believe that sometime next year, our inflation is going to go below 2%. Right now, we're still sitting at a 4-ish% inflation, I think, from the CPI report. I don't really remember, but it's around 4%. So to have it drop to below 2%, especially below 2% by March, it's still kind of an unreasonable projection. But I believe this is where that market enthusiasm is coming from in the TLT. So if we look at the TLT reaction, you can see it went way up again. And so we went parabolic, pulled back to this EMA 8, and now in a single day, we've almost reached that MA 200. So we'll see what happens. We'll see if this enthusiasm, if this exuberance keeps us going above the MA 200. If not, we should pull back pretty hard, and at the same time the S&P 500 and QQQ and Dow Jones should be pulling back as well. So right now I'm going to be exercising a lot of caution. I'm going to be taking profits where I can, or at least hedging my positions where I can. I might even just my weaker positions that haven't been performing super well, I would just take them off the table right now. And then I would rebalance my portfolio to a much more neutral stance at this particular moment in time. So that's about it. The FOMC definitely gave us a lot of action and a lot of things to act on. So this is the market that we have. So if we do get that pullback, then we can start talking about how deep does it go, and then after we recover or bounce from that pullback, just how much higher we might go above the current highs. So that's it for Friday is going to be quadruple witching. Someone reminded me of that, so thank you very much. So if you have positions that you think you might want to adjust, tomorrow is the day to do it. You don't want to wait until Friday, because Friday is going to be a lot of activity of portfolio managers rolling their positions and getting rid of the positions that they don't like. So they're going to be doing a lot of portfolio rebalancing at this time as well. So we'd probably want to avoid that huge rush, because prices can suddenly fluctuate up and down, and our profitable position or mildly profitable position could be pushed into a loss through this activity. So we'd rather get out of our positions tomorrow and then be sitting good at a nice neutral position, and just wait for Friday's volatility to pass us by, and then reevaluate on Monday. So we're doing a few things at the same time because of the potential pullback, the quadruple witching, and because of the weekend. We just really want to get into a more neutral position in all of our portfolios, and then we can regroup on Monday. All right, so that's it for today, guys. A little bit shorter, but heavily FOMC focused, just like the market right now is heavily FOMC focused, and we want to respond accordingly in our portfolios. Okay, so I will see you guys tomorrow morning. Have a wonderful rest of your day.